Most people who get denied by Social Security just give up. They assume the government knows best, the decision is final, and fighting it is pointless. That single assumption costs them thousands of dollars in benefits they were legally entitled to. Here is the number most people never see. Social Security denies approximately 67% of initial disability claims. And of those denied claims that go all the way through the appeal process, nearly 50% are eventually approved. The appeal system exists because SSA gets it wrong all the time. This video covers 3 different types of Social Security appeals. First, appealing a retirement benefit amount you believe was miscalculated. Second, appealing an IRMAA Medicare surcharge after a life-changing event. Third, appealing a disability benefit denial. Each one has a different process and a different timeline. Something important up front. The appeal process is designed to be accessible to everyone. You do not need a lawyer for most appeals. You do not need to pay anyone. The forms are free. The process is clearly documented at SSA.gov, and SSA is required by law to give you a fair hearing if you request one. I want to be honest about what appeals are not. They are not a guaranteed win. They are not fast, and they require documentation and persistence. But if you believe SSA made an error, or if your circumstances have changed, walking away without appealing is almost always the wrong decision. By the end of this video, you will know exactly how to file each type of appeal, what documentation you need, what the deadlines are, and the single most important factor that determines whether your appeal succeeds or fails. Let us start with the most common, retirement benefit errors. Appeal Type 1, your retirement benefit amount. If you believe Social Security calculated your monthly benefit incorrectly because of errors in your earnings record, a wrong birth date, incorrectly applied delayed credits, or missing years of work, you have the legal right to request a formal reconsideration. The 5 most common retirement benefit errors that people successfully appeal. Years of earnings showing 0 when income was actually earned. Self-employment income not properly credited. Military service earnings not applied. Delayed retirement credits miscalculated. And wrong full retirement age used in the calculation. Step 1. Before filing any retirement appeal, go to SSA.gov and log into your account. Click Review Your Earnings Record. You will see your reported earnings for every single year you worked. Compare each year carefully against your own tax returns, W-2 forms, and 1099 statements. Even 1 year of underreported earnings, if you can prove it with documentation, can permanently increase your monthly benefit. Social Security uses your 35 highest earning years to calculate your average indexed monthly earnings. Correcting even 1 underreported year can meaningfully raise your AIME and your lifetime benefit. How to file a retirement benefit reconsideration. Call Social Security at 1-800-772-1213 and explain you believe your benefit was miscalculated. Ask to request a formal reconsideration. You can also visit your local SSA office or file online through SSA.gov. Bring or upload copies of your tax returns for any disputed years. Timeline for retirement benefit reconsideration. SSA typically responds within 30 to 90 days. If SSA denies your reconsideration, you can escalate to a hearing before an administrative law judge. You have 60 days from the denial letter, plus 5 days for mail, to file the ALJ hearing request. Do not miss this window. One specific situation worth knowing. If you delayed claiming Social Security and believe your delayed retirement credits were not correctly applied, request your benefit calculation breakdown in writing from SSA. This document shows exactly how they computed your benefit. Errors in delayed credit calculations are more common than most people realize. Appeal Type 2, IRMAA Medicare surcharges. If Social Security has raised your Medicare Part B or Part D premium because your income exceeded a threshold 2 years ago, and your income has since dropped significantly due to a life-changing event, you can appeal. The form is called SSA-44. It is completely free and can save you hundreds or thousands of dollars per year. What IRMAA is and why it hurts. Medicare uses your income from 2 years prior to set your current premiums. If your income 2 years ago was high because you were still working, had a large IRA withdrawal, or sold property, your Medicare premium this year may be significantly higher than the standard rate. IRMAA surcharges can add $500 to $4,000 per year per person.
The 7 life-changing events that qualify you to appeal an IRMAA determination: marriage, divorce or annulment, death of a spouse, work stoppage or reduction in hours, loss of income-producing property, loss of pension income due to employer bankruptcy or reorganization, and receipt of an employer settlement payment. How to download and complete Form SSA-44. Go to ssa.gov and search for Form SSA-44. The form asks for your name, Medicare number, the life-changing event that occurred and when, and the income year you want SSA to use instead of the 2-year look-back. Attach documentation of the event, such as a retirement letter, death certificate, divorce decree, or employer letter confirming work reduction. Where to submit Form SSA-44? Mail it or hand-deliver it to your local Social Security office. SSA does not accept email submissions for this form. Find your nearest office at ssa.gov/locator. If you hand-deliver, always ask for a stamped receipt showing the date received. Keep a copy of everything you submit. IRMAA appeal timeline and outcome. SSA typically processes Form SSA-44 within 30 to 60 days. If approved, your reduced premium takes effect in the current benefit year. You can also request a retroactive adjustment for premiums already paid this year. This can result in a refund of hundreds, or in some cases, more than $1,000. Real example. Patricia retired at 63. 2 years before, she had sold her rental property and had a high income year. Medicare charged her an IRMAA surcharge of $800 per month, $9,600 per year extra. She filed SSA-44 with her retirement letter showing her income had dropped permanently. SSA approved the appeal and refunded $4,800 she had already paid that year. Appeal Type 3, the most complex but the most consequential. Social Security Disability Insurance Appeals. If you have been denied SSDI and you believe you meet the medical criteria for disability, the appeal process has 4 distinct levels. Most people who ultimately win their case do so at the 3rd level, the administrative law judge hearing. Why does SSA deny so many disability claims at the start? The initial review is done by a state agency called Disability Determination Services, not SSA directly. These reviewers often deny borderline cases because the initial approval bar is very high and the caseload is enormous. The appeal process exists specifically to give a 2nd, 3rd, and 4th review to cases that may have been decided too quickly. Level 1 Appeal. Reconsideration. After your initial denial, you have 60 days from the date on the denial letter, plus 5 days for mailing, to file for reconsideration. You can file online at appeals.ssa.gov, by phone, or in person at your local office. A different DDS reviewer examines your case. The approval rate at this level is approximately 13%. Low, but you must complete it to access the next level. How to file reconsideration. Go to appeals.ssa.gov and start the reconsideration process online. You will need your original denial notice, your Social Security number, and any new medical records or information obtained since your initial application. If your condition has worsened since you first applied, document it. If you saw new doctors, include their records. Level 2 Appeal, the administrative law judge hearing. If reconsideration is denied, you again have 60 days plus 5 days to request an ALJ hearing. This is where the real opportunity is. An ALJ is an independent federal judge, not a DDS employee, who holds a formal hearing where you can testify, present evidence, and have witnesses speak on your behalf. How ALJ hearings work today. Most ALJ hearings are now conducted by video. You appear on screen from your home or a local SSA office. The judge reviews your complete case file, asks questions about your medical condition and how it limits your ability to work, and typically calls a vocational expert who testifies about what jobs, if any, you could perform given your functional limitations. The 3 factors that most determine ALJ hearing success. Factor 1. Complete, current, and consistent medical documentation showing your condition has not improved. Factor 2. A detailed written statement from your treating physician explaining specifically how your condition limits your work-related functional abilities, not just listing the diagnosis. Factor 3. Your own consistent and credible testimony about your daily limitations. The most common reason ALJ appeals fail: Gaps in medical treatment. If there are months or years between doctor visits, the ALJ may conclude your condition is not as serious as claimed. If you cannot afford treatment, document why in writing. If you used home remedies or over-the-counter medication, document that too. The record must tell a complete and continuous story.
Can you represent yourself at an ALJ hearing?
Yes, many people do. But studies consistently show that claimants with representation, whether an attorney or a non-attorney disability advocate, have significantly higher approval rates than those who represent themselves. Representatives know what evidence the judge needs and how to present the medical record effectively. How disability attorneys and representatives get paid. Most Social Security disability attorneys and non-attorney representatives work on a contingency fee basis. They only get paid if you win. The fee is set by federal law at 25% of your back benefits, the retroactive payments for months you were disabled, capped at $7,200 in 2026. If you lose, you pay nothing. Level 3 and 4, the Appeals Council and Federal District Court. If the ALJ denies your claim, you can request review by the Appeals Council within 60 days. The council may grant review, deny review, or send the case back to an ALJ. If all administrative remedies are exhausted, federal court is the final option. At these levels, legal representation is strongly recommended. The deadline warning I want to repeat very clearly, because missing it means starting the entire process over from the beginning. At every single level of the Social Security appeal process, reconsideration, ALJ hearing, Appeals Council, you have exactly 60 days from the date on the denial letter, plus 5 days assumed for mailing, to file your next appeal. What to do the moment you receive any Social Security denial letter. Step 1. Write the date on the envelope and save it. Step 2. Count 65 days forward from that date and mark it on your calendar in red. Step 3. Do not wait to gather perfect documentation before filing. File the appeal first, then improve your documentation. Late appeals are almost never accepted. Can you get an extension on the 60-day deadline? In very limited circumstances, yes. If a serious medical or personal crisis genuinely prevented you from filing on time, you can request a good cause extension. You must explain in writing why you were unable to file and provide supporting documentation. Extensions are granted rarely and are never guaranteed. 3 completely free resources for any Social Security appeal. Resource 1. The SSA Online Appeals Portal at appeals.ssa.gov. You can file reconsideration requests, ALJ hearing requests, and Appeals Council requests entirely online. No office visit required. Available 24 hours a day, 7 days a week. Resource 2. Your local Social Security office. Call 1-800-772-1213 to find your nearest office and schedule a free appointment. Local office staff can walk you through the appeal process, help you understand what documentation you need, and accept your filed paperwork directly. Resource 3. Free legal aid for disability appeals. If you prefer representation but cannot afford an attorney, most states have free legal aid societies that assist with SSDI appeals at no cost. You can also visit nsscr.org, the National Organization of Social Security Claimants Representatives, to find a certified disability representative in your area. Case study. Robert, age 67, retired last year. His Social Security statement showed a benefit of $2,140 per month. But when he reviewed his earnings record at SSA.gov, he found that 2 years in the early 1990s showed 0 earnings, years when he clearly remembered working as a self-employed contractor and filing his taxes. Robert gathered his federal tax returns from those 2 years, which showed net self-employment income of $28,000 and $31,000 respectively. He called SSA at 1-800-772-1213, explained the error, requested a formal reconsideration, and uploaded digital copies of both tax returns through SSA.gov. SSA reviewed the file and corrected both years within 45 days. Result: Robert's corrected benefit increased from $2,140 to $2,310 per month, a gain of $170 more every month. Over 20 years of retirement, that correction adds $40,800 in total additional lifetime income. 1 phone call, 2 pieces of paper, $40,000. Robert did not hire an attorney. He did not pay anyone. He spent about 2 hours reviewing his record, gathering his old tax returns, and making the phone call. The only investment required was his time. The return on that time was $40,800. This is why reviewing your earnings record is the first step for anyone approaching retirement. Your action checklist. 3 paths based on your specific situation. Identify which path applies to you and follow only that one this week. Do not try to do all 3 at once. Path A for retirement benefit errors. Go to SSA.gov this week and review your complete earnings record year by year. Compare each year against your tax returns or W-2s. If you find years with missing or underreported earnings, call SSA at 1-800-772-1213 and request a formal reconsideration with your tax documents as supporting evidence. Path B for IRMAA Medicare surcharges. Download Form SSA-44 from SSA.gov this week. Complete all required fields. Attach documentation of the life-changing event that reduced your income, such as a retirement letter, death certificate, or employer letter. Mail or hand deliver to your local SSA office and ask for a stamped receipt. Path C for disability appeals. Check the date on your most recent denial letter immediately. Count exactly 65 days from that date. That is your filing deadline. Go to appeals.ssa.gov and file your reconsideration or ALJ hearing request before that date, even if your documentation is not yet complete. File first and improve your submission later. If this video helped you understand your appeal rights, please share it with one person you know who has been denied a Social Security benefit and given up. They may still be within their appeal window and not know it. The information in this video could genuinely change their retirement. Drop a comment below. Which type of appeal applies to your situation? A retirement benefit error, an IRMAA surcharge, or a disability denial? Your question and your experience may help someone else watching who is in the exact same situation right now. This Friday on Calm Money Retirement. If you are 60 years old with less than $200,000 saved for retirement, we have 5 specific moves that can fundamentally change your retirement outcome. It is not too late, but the next 5 years matter more than the previous 30 combined. Disclaimer: this video is for educational purposes only and does not constitute personalized legal, financial, or Social Security advice. Social Security appeal rules, deadlines, and approval criteria change over time and vary by individual situation. Always verify current rules directly at ssa.gov or by calling 1-800-772-1213. For complex disability cases, consider consulting a licensed Social Security disability attorney or accredited representative. Calm Money Retirement is not a law firm and is not a registered investment advisor.